Ni hao. I'm Carvelli, Master of Finance. Welcome to the international community. Thanks for joining us today. Our topic today is mortgage insurance versus personal insurance and which one you should buy. Very exciting news. You just bought that new house. Now, the next step is the mortgage broker or banker is going to ask you if you want specifically life or disability protection on this asset. This is a bit complicated because this works on the mortgage only. Also, this payment you're making, the premium, works off the decreasing balance of the mortgage. So for example, if it's $300,000 and you only owe $250, you're paying on the $300,000, which is a little bit of a ripoff because you're paying at a higher amount, right, than what it is. So let's keep in mind, if you die, of course this will pay out the total mortgage. But if you're disabled, this will make payments towards the mortgage as long as you're disabled. You got to be very careful on this if there's exclusions like 3 months before they pay you, etc., etc. Now, for example, if you have any occupation in the fine print, that means that you don't have to go back to being a welder and you'll have to do a telemarketing job. This is pretty bad because, you know, it's a total difference of wages. Whereas if it's your own occupation, you have to go back to welding and they have to pay you. This is some serious stuff on this one. Meaning, if it's your own personal disability, you can request this. Okay, so you got to be very clear on this. Another issue with the mortgage insurance is, say you just sell the house and move, or buy another house, and what happens to that money? That's not good also because you lose all that money. So that's really bad, right? Because you paid premiums. Whereas with your personal insurance, life or disability, you would be paying into it and you still have it. For example, your disability, you have to 65. And your life insurance, it could be a term insurance plan that runs it after 10 years, but you know what you want. You know how long you want it and you're accepting that. With the house, you never know what you're doing. You could get transferred, anything could happen. So this is very important also. Another downside to the mortgage insurance is that if you sell this property, move away, anything happens, what happens to all those payments? They're basically gone, right? So this is where the personal insurance is better, because if you have disability insurance, it's to age 65 and you're not losing it. Or if you have life insurance, the same, you're not losing it until it's done. Now, if you're older or even younger and have problems with getting insurance, you can look at the mortgage insurance for sure. But you really want to look that you're not just throwing one over their head to get it, because they have rules too. Remember, you need to read the fine print because there's rules in there also, just like your personal side told you that you couldn't get it. So they're going to give it to you, but it doesn't mean that it's going to take effect. It's your job to read the small print. To sum it up, the bottom line is personal insurance is probably better than the mortgage insurance, okay, in most scenarios. And if you have personal insurance, you could always double up on the mortgage insurance if you feel you need more. That's an option too, okay? Question 1, do you need both mortgage insurance and life insurance? The answer is no. You need one or the other, but you definitely don't need mortgage insurance as its own thing. Mortgage insurance is life insurance. Question 2, is it necessary to buy mortgage insurance? Well, that's depending if you have personal insurance. If you don't have personal insurance and you don't buy mortgage insurance, you're not going to have any insurance, which wouldn't be that advisable. So yes, I would recommend mortgage insurance, but I would look at buying personal insurance over it first. Now, can you cancel mortgage insurance? In the research I've done, yes, you can, but there's 195 countries in the world, plus territories, and I don't know all the laws and regulations. So you need to check with your country before you buy it. And not only that, you need to see the fine print. Don't go just based on what they say. Thanks for tuning in today. Remember, invest in financial literacy with me. Subscribe to our YouTube channel, follow us on Instagram, and like us on Facebook. Thank you very much. I'm Carvelli, Master of Finance. God bless, and hope to see you soon.